Welcome back. Well, we've taken the index calls from our experts. Let's take stock calls then. Mitesh, let me start with you. What would you be buying and selling?
Anuj, starting the day with more of sell calls because the immediate trend is down, but I hope sometime during the day we see a reversal. For the time being, Concord is a sell with a stop at 680, targets of 650 here. Intellect was a sell earlier as well, even now looks weak. Can be sold with a stop at 598 for targets of 551. Colgate is a buy with a stop below 1574 for targets of 1620, and National Aluminum is a sell as well. Keep a stop at 79, look for targets of 73.
Okay, and Sudarshan, good morning. What about your stock ideas? Also wanted your thoughts on the IT space because of the pressure that we're seeing over there on account of, the variable pays being cut, etc., margin pressures. Do you think that there could be some sell-off?
Yeah, good morning. First, the IT space, yes. It is possible that most of the big major IT companies can see a small sell-off. That's the sign on the charts. But I don't think we should go short. We should use that sell-off eventually to look for buying opportunities. Not now, but later. My stocks, it's a mix. AV Capital is a buy. This stock has come down very mildly to a support level. Consider buying it with a stop under 106. Dixon actually had a good day yesterday. That's surprising when the Nifty was falling. That's a buying opportunity. It's also at a 3-month high. Buy with a stop under 38.75. Sorry. And I have two short sells. Shriram Transport Finance has broken down from the support level. The trend has been down for it. Intraday short with a stop above 1330, and Motherson Sumi is a very choppy chart. I think there's more downside here. Intraday short with a stop above 128.
Okay, gentlemen, thanks for those calls. The pre-opening rates are all over the place. The bulls would hope that that's not the case. Though I must point out that the currency has been quite resilient. It's not breaking the 80 mark. Most of the global currencies are back to their lows, but on the rupee, we are still at 79.8382 thereabout. So still holding firm. Shubham Agarwal is joining us, CEO and Head of Research at QuantSap Advisory for some F&O trade. Shubham, good morning. What would be your top trades?
Hi, good morning, Anuj. So looking at the overall Nifty placement, looks like that this is just a pullback. But even though in this pullback for very short term, we should be looking at some sell opportunities as well. So I have one buy and two sell today. The first one being a buy on Bharti Airtel, where we saw a breakout happening a couple of days back, and post that looks like that it could again look for the new high. So a 730 strike call option for the September series can be bought for a target of 30 with a stop loss at 19. The sell call will be firstly on TCS, where the entire IT pack is witnessing a lot of selling and the derivative data is indicating a short covering cycle. So a 3300 strike put option on TCS can be bought for the September series for a target of 88 with a stop loss at 54. And lastly, a sell call on Dr. Reddy's. So the pharma space is also getting beaten down, and in the last few days we have seen a lot of shorts getting built. So 4100 strike put option on Dr. Reddy for the September series can be bought for a target of 132 with a stop loss at 85.
Okay, pleasure speaking to you. Thanks a lot for joining in. That's QuantSap with their views. Shubham Agarwal from QuantSap Advisory. Let's get back to the markets. Prakash Diwan is still with us. Prakash, did you hear the management of Metro Brands? They seem extremely confident. The stock has done very well, and Prashant was shocked with the cost of Fit Flops, but we all know how expensive these products are, right? These shoes are.
To be sure, Sonia, I'll tell you honestly, I heard flip-flops.
Okay. So you thought the general chappals are like for 7,000 rupees?
But
yeah.
Prashant, let me also warn you, those fit flops are actually simple sandals. If you look at them, you'll probably wonder why I need to pay 7-8 grand for this. But the key there, this UK brand has, what they've done is they've mastered the ergonomics rather than the aesthetics of a simple footwear. And most of it gets made in Vietnam and all of those, Cambodia and all those places. And it's a distinctly high street brand, and that's why there's a very good match with Metro, right? So yeah, I mean, you probably have the success of the Crocs acceptance in India, which eggs them on. And the beauty about this arrangement that they've opened, I think, the first store in around April or May of this year, the FitFlop outlet. It's a distribution arrangement across all channels, including the e-commerce and the web store and all, which is very promising. because that's something which a lot of brands don't easily let you have. So the EBO is, of course, the time-consuming build-up, but this will happen. I think Metro is fully priced. If you ask me now, from a cash flow perspective, they have great margins, EBITDA of 30-32%. They will continue to do well as long as there's recovery in our business travel and things like that. So if Gillette does well, with normalization happens, people start going to work and sprucing themselves up. I'm sure footwear will also sell. So it's a very well-positioned brand, well-positioned this thing. They are very choosy about where they open their outlets. We've seen some of them being closed. Even the DMart experiment that they have, that walkway store-in-store concept, they've closed that. It didn't contribute much though to their top line. So it's all in all, it's a great business. We've loved it from the time it's been around, from the IPO. But at this point, getting an entry and making money might be a bit difficult because it's well priced. But if you get a dip, why not? You could always look at it from a longer-term perspective.
The stock looks as expensive as the shoes, perhaps. I mean, I take your point, Prashant, that whatever it is, ergonomics or no ergonomics, for like we call them two patti chappal, right? For that, I mean, you're paying 8,000 rupees. The men's brand, by the way, is for 8,000.
I think
the women's fit flops are 7,000. The men's
usually they're more expensive, right? Women's footwear is more expensive.
Obviously, 8,000 rupees.
For for fit flops. I just looked at the website.
What is this?
But that's why the Metro stock is doing that well, right, Prakash? What do you say?
Yeah, I mean that's what I was explaining. It's got tailwinds of premium consumption, and what smartly they're doing, I should point out as a strategy. I missed some parts of the interview because of an audio issue, but what they've done is 84% of the contribution comes from their own brand. So the contribution from the other brands where they are associated is right now not so significant, which means they have control over the margins out there, and that's why the overall consolidated EBITDA is so decent in terms of margins. So that I think is the key. And there also you'll be surprised that 1,500 is the average price, or most of the shoes that they sell is over $1,500, which makes them a mass affluent kind of a player. That's a segment that's been unaffected of sorts and probably will grow much faster than the lower end at this point in time. So I think it's got everything in place. As you said, the price is what kind of gets a little bit difficult. It is inhibiting from a valuation perspective. So wherever you get a dip, you could probably look at it.
All right. Prakash, thank you very much. Good conversation as always. Thank you very much. And Sonia will buy a pair and give us a review. I mean, test it for a week and then come back with a review.
I'm always the...
I thought you said Sonia will buy and gift us. So.
That's even better, huh?
8,000 rupees slippers? No way, guys.
Birthday is coming up, so maybe.
Well, from footwear to mattresses, right? I mean, Sheela Foam is the company we are talking about. They posted good first quarter earnings. The company's managed to expand their gross margins sequentially despite a sharp rise in TDI prices. We have the management with us. Rahul Gautam is managing director of the company. Rahul, great to have you with us here. Good morning. Thanks very much. I mean, before we come to margins, etc., in the conference call, you said that you're closing a couple of plants down in Spain. Can you tell us more? Have you done this and why are you doing this?
Thank you. Thank you for having me here. No, I think probably there has been a misunderstanding on that issue. We are not closing down any plants in Spain. We have only one plant. And the only thing that I said is that out of the large European market, it's a small speck. It's only about 1% of what the Europe does. And therefore, whatever may be the recession, etc., in Europe, we still have scope to grow. No, we are not closing down any plants.
Were you saying that there is some pressure on other players there?
Yes, there is a lot of pressure. In fact, if we will take the last 6 months, there is a drop of almost about 25 to 30% in most of the people, and that's because of the recession which is there and because of the fuel costs that are there.
Your one plant continues to operate and will continue to operate, right? And what capacity is it operating at?
So it's currently operating at about 80% capacity, but we are actually expanding, and that process was decided before all this recession started. But we are bullish on that, and we are continuing to expand. So our 1% may become like 1.5%, and we have markets for that.
Okay, in terms of growth, what are you looking at? The revenue growth in Q1 was a healthy, almost 60%. What are your targets for the full year?
So Sonia, let me just clarify that this 60% looks very nice, but it was on a very small base of last year. But as we grow this year, on an average, anything between 12 to 13% growth we must have when we close the year.
12 to 13% growth by the end of the year is what you're looking at?
That's exactly. And, in between, of course, are periods where, the bases have changed in the last year. And therefore, I think to look at a complete year would be more relevant.
Is it because, are you looking at a conservative growth rate because of what's happening in the Australia business, in the European Union, a bit of a slowdown? Is that the right way to look at it?
So I was definitely very conservative, though I must add that as far as Australia is concerned, Australia just seems to be unaffected by whatever is happening in the world. I think it's too tucked away into one corner and has a market of its own. And the deglobalization is also kind of playing out there. People are preferring Australian products, etc. So the current business is at a very healthy state. In fact, whatever is the projections, we are slightly ahead of that. When I said 13%, I was being conservative. It would be higher than that, but I was just being conservative on that.
Okay, the reason I asked is because you have a new plant that will come up on stream by October of this year. So that's, in 2 months from now. Once that comes up, what is the revenues that you're targeting from there?
So, Sonia, there I have to share that that plant is going to be delayed on account of the plant and machinery, which has been delayed because of some special steels which were to come from Ukraine. And, while looking and trying to find out for alternates, it has taken time. So this is not going to happen in October, but it's going to happen more like end of Q1 next year. And so there's going to be a delay, and the impact of that plant starting will only be in this subsequent financial year.
All right, Rahul, we'll leave it there today. Thanks a lot for joining us. That's Sheila Foam. Before we discuss the standard brokerage report, let's just look at the pre-open. It settled much worse than what the SGX Nifty told us. In fact, the Nifty, if it opens, will be right at the 20-day moving average. The 20-day moving average is 17,340. The Nifty is opening at 17,357. Mitesh, if we open here and the Bank Nifty leading it once again, would you cover shorts or maybe even go contra long? What's the call on index and your 9-10 call?
Covering shorts, Anuj, yes. Going contra long, I think, as I said, we'll wait for half an hour to see the price action and then take it from there. And the 9-10 call for me would be a sell on Intellect Design with a stop at 598 for targets of 551.
Referred to an IT stock. Let's, in fact, now address our standard brokerage report. Nimesh is joining us, and I guess he's covering IT. Nimesh?
Yes, Anuj. So my standard brokerage today is on IT name, and a big downgrade on the remaining overweight stocks from JP Morgan within the IT names. So today they have downgraded Infosys, Tech Mahindra, Emphasis and Persistent all to neutral from overweight given the recent price hike. In fact, they've turned more bearish on the IT sector. Now they expect the margin erosion to persist in the medium term and stay meaningfully below the long-term averages, and they see limited incremental margin levers going ahead. In fact, the Indian IT names even now are trading at a 40%, more than 40% premium to the pre-COVID long-term averages, and they see and that too when the peak growth is behind and the margins are structurally getting eroded. So they're turning more bearish. They've downgraded all the other 4 remaining overweight stocks within the IT names to neutral now, and they believe any meaningful upside from here should be a rally to exit into the IT names in India.
Okay, Nimesh, thanks a lot for that. I think that's a very important point he made, that the IT stocks are still trading at over 40% premium to the pre-COVID levels. During the COVID wave, after that, of course, we had that work from home and a lot of margin levers for IT companies because of the work from home advantage as well, and a lot of digitization. But now with growth moderating once again, what kind of valuation do you want to give them? Do you want to give them still a premium, or do you want these stocks to go back to the pre-COVID multiples. I'm not even talking about the levels, multiples. And if that is the case, then there's 30 to 40% downside purely by multiples. Infosys, of course, is starting about 2% lower. Remember, most of these stocks were weak yesterday as well, but they have sort of turned. Let's now count down to the market opening. Should be a soft start, and after that, of course, we'll take it from there. In terms of individual names, of course, IT and banks both have been weak. Devyani International, by the way, is the other one which we'll be keeping an eye on because of that block. But for now, let's focus on the largest stocks. The Nifty is opening about 130 point lower, 134, 17,352, 346 on the Nifty. So right at the 20-day moving average, and almost like an algo trade, some shorts will book at that 20-day moving average. So 17,382 on the Nifty now. The Bank Nifty is also opening about 200 points lower. Today is also the weekly options expiry on the Financial Nifty. So some of the financial names will be in focus. The big drag on the market is from the IT names. Wipro is down 2%, Infosys is down 2.5%. Tech Mahindra is down close to 1.5%. So all these names clearly dragging the market. TCS as well down about 1%. IndusInd Bank is down about 2%. The Nifty is cutting its losses, by the way. As I said, maybe right at the 20-day moving average, there's some algo trade to book some shorts. Tata Motors, HDFC, HUL, BPCL, Tata Steel, Sun Pharma, Larsen & Toubro, other stocks on the downside. On the upside, not too many. NTPC and Mahindra, maybe even Eicher Motors, but it's really on the downside. And now Infosys is your top Nifty loser, is also top contributor on the way down, 2.5% down on Infosys. And in fact, the top 4 losers are all IT names: Wipro, Infosys, HCL Tech, and Tech Mahindra. On the Nifty now, we have seen the first trade play out, which is at the 20-day moving average, some short covering. But it will be interesting to see if there's a second test of the 20-day moving average intraday. Sonia, over to you.
Also, Anuj, just to take your point forward on IT, we were discussing this, right, about how a lot of brokerages are now downgrading IT stocks. This morning, JP Morgan has downgraded a lot of the IT stocks. All their overweights, they've downgraded to neutral, and they stay underweight on the sector. It's the same theme. A structural margin erosion is the key risk to all estimates, they say. And they have downgraded Infosys, Tech Mahindra, Emphasis, and Persistent to neutral, given the recent price action. So brokerages are moving in as well on that. Just wanted to talk a little bit about the broader markets. The mid-cap index is also under pressure, down about 228 points right now. Gland Pharma is one stock that is looking pretty good. Goldman Sachs has actually initiated coverage on Gland Pharma. They have a target price of 28.30. They talk about how the company is a global generic injectable player and doing pretty well. So Gland Pharma is in focus on the upside. A lot of Adani stocks, once again, Adani Green is up about 2% Zomato is moving up with a bit of strength, bucking the trend today. In fact, a lot of these companies, Paytm, PB Fintech, Zomato, all looking good. Metro Brands, very positive conversation from the management, so that one is up in the green. Varun Beverages, it has been in that FTSE inclusion was there yesterday as well. So Varun Beverages has been moving with some strength. A couple of other stocks as well. EID, Parry, Finolex Industries, a couple of stocks that are bucking the trend this morning. That's on the upside. On the downside, the pressure is coming in. Devyani International, for obvious reasons, is down 5%. Ashok Leyland is down 1%. IDFC First Bank, yesterday as well, banks were under pressure. Yes Bank, Bank of Baroda, all in the red at the moment. And by the way, there was a big deal on Devyani International. 2 crore shares got traded there. So Devyani is now down about 5% and volumes also picking up on that one. But weak start to trade.
A weak start is expected. 100 plus points on the Nifty is what we have. And IT, of course, is top of the losing list and exerting the most amount of pressure on the broader market, on the headline indices, etc. as well. Lots moving, and we'll come back to some of them. Volumes are still picking up as we speak. But will we see a bit of a swing higher, or will we only get a swing, a little lower down from here? That's the question which Mitesh also was talking about. So maybe we wait for the first hour before we're able to say anything conclusively. We have our market master of the day, and Nilesh Shah is our market master, managing director and CEO at Envision Capital. Nilesh, great to have you with us here on the program. Thank you very much. And it's good to have you here because we want to talk about IT. It's a space that you've tracked for a long time, and you've strong views about. Nimesh just highlighted what JP Morgan's latest call is. I mean, they downgraded the space some time back. They're coming in again saying that any meaningful rallies should be used to sell. Would you agree with that? And what is your own view on where IT as a pack is at now?
Well, the technology services space is at a very interesting kind of point right now. I probably believe that some of these downgrades are a bit late in the day. There's already been a significant price erosion. A lot of the froth which has been there is clearly gone. So to that extent, I wouldn't be as circumspect about what some of these brokerages are calling out. I probably have a very different point of view that you have two sets of components or players in the IT services space. One are really the big boys, the large guys, the top 3, 4, 5 names. I believe they are likely to be under more pressure because they never had a very, very strong demand environment. At best, probably their revenues grew at about maybe 10 to 12%. And therefore, the impact of margin pressures will be more felt by them. Versus that, some of the tier 2, the mid-cap ones, the specialized players, I believe the demand environment for them, in fact, will get even better. And their ability to hold on to margins will be good because their margins are a tad lower than the large cap names. So I probably think that maybe, yes, if there is rally, you probably switch out from some of these large cap names and you probably get into the tier 2 names. And it's quite possible over the next maybe 2 to 3 years, some of the names from the mid-cap space will emerge to be very, very strong performers.
Oh, absolutely. I think you hit the nail on the head. Nilesh, good morning. I think for a long time you've had this position that mid-cap IT perhaps is the space. I remember, many years back, Sonata Software was a stock that you had spoken about. It was 20 rupees then. It's now, of course, 700. But just to continue that point, Nilesh, I think the worry is not about just the margin pressure. The worry is on how the valuation got reset post-COVID, and even now after the correction, the point that even JP Morgan is making is that they're still trading at multiples which are 40% higher than the pre-COVID levels and higher than the averages. The question is on multiples. Do they come down even more in this rising interest rate environment?
Yes, that's quite possible, Anuj. I mean, clearly, if global equity markets are going to be under pressure, if the US tech space is going to be under pressure, if indices like the NASDAQ are going to be under pressure, it's quite possible that we would probably see some softening or moderation in the valuations. But when that happens, you've got to be able to differentiate between the ones which will pretty much going to witness growth, which is going to be business as usual, versus those which essentially are going to witness significantly higher growth. And just to talk about valuations, in fact, today there are media reports that there's a global product engineering company called Quest Global, which is likely to basically get sold out. And that is going to get sold out at about 20 times EBITDA to FY23 earnings. 1 year forward earnings, 20 times EBITDA multiples. So there is still a lot of transactions which are happening out there in the private space, which are happening still at probably the current valuations or maybe at premium to the current valuations. So the point essentially is that maybe it's not time to be in the generic IT services companies and be in the specialized mid-cap tier 2 IT services companies. That's where the opportunity is going to be from a multi-year horizon.
Okay, well, just want to point out that today one space that's doing quite well is the auto space yet again. I mean, no surprises there. Eicher Motors is your top gainer. CLSA has in fact raised its target price on Eicher Motors to 4154. And they say that the Royal Enfield volumes are growing at a very strong pace. And most of the customers will look to replace their bikes in the next, in 7-8 years from when they bought it. So perhaps there'll be replacement coming through. I don't really buy that argument too much because, people may want to even replace it with other brands, you never know. But in any case, their point is that demand is picking up. Nilesh, good morning. Your thoughts here, because there's so much brewing in the auto space. Demand is coming back. Supply side issues have been gotten resolved. You think it's too late to get in, or is there more to go?
No, I don't think it is too late. Clearly, the auto space seems to be in a sweet spot, unless, of course, some of the key input prices like steel and all that head even higher than the highs that we've seen earlier this year. So in case if the current raw material environment in terms of pricing and all of that remains pretty much like what it is today, then it's quite possible that the demand environment for automobiles in India remains very, very strong. It has been relatively strong. It's just that they've faced more challenges about supply chain and chip shortages and all of that. And if we're talking about a slowdown globally, especially in a very large market like China, if you're going to see a slowdown, that's going to be advantage India. You're going to see now lesser challenges in terms of chip shortages and supply chain related issues. So on the whole, the automobile space looks extremely exciting, and we're going to see at least maybe a few more quarters of some really strong growth. So I don't think it's too late. And in fact, if there are corrections like we're seeing in the last few days, if you see stock price corrections, that's actually an opportunity to buy into some of the automobile names.
Nilesh, some of the companies that we've been speaking with across a range, I mean, consumer brands and others, not staples. Staples, of course, we've been hearing from them about pressure at the lower end of the price segment. But other companies as well, I mean, for example, Metro Brands that we spoke with and others over the last many days, at the lower end, pretty much everyone is echoing the same thing, that there is stress. Any thoughts on that? Is that likely to spread? I mean, the premium end is doing fantastically well. That's what we hear from most companies we speak with.
Yeah, absolutely. I clearly think the premium end is doing well and probably is likely to kind of keep doing well as they continue to exert pricing strength and are able to basically pass on higher input prices. But yes, the mass segment is facing fair bit of challenges, and I still think that that's probably a space to probably avoid, unless you believe that maybe some of those raw material related pressures have peaked out. So a classic case on point is essentially the food segment, the snacking space. There it looks like is that some of the prices, especially things like palm oil and all of that, are unlikely to sustain at the levels that we've seen earlier this year. And it's quite possible that maybe a few quarters down the line, or maybe a year or two down the line, you're going to see a softening of a lot of those pressures. And in addition to that, bit of margin expansion coming in because of some of the pricing related changes that they have been able to do, grammages related changes and all of that. So that looks to be a relatively safe and an attractive spot within the entire consumer staples. But otherwise, for now, I think one needs to take a few steps back on the entire overall consumer staple space.
The markets, by the way, making a huge comeback, especially in the broader market. The mid-cap index is comfortably in the green. The advanced decline is well in favor of the greens, 3:1 on advanced decline. India Cements is a stock which is doing well. All the auto names doing well. A couple of these second-tier banks doing well. So at least on the broader market, there's a bit of a comeback. On the Nifty, today's low is right at the 20-day moving average, and from that point, the Nifty is already up about 100 points. So maybe that algo trade has played out on the Nifty. But Nilesh. 17,340, Prashant. Nilesh, a word on the market itself, because there's a bit of a debate out here, given what's happening in the US, whether it was just a very sharp bear market rally which almost made everyone believe that a new bull market has started, or actually it was a start of something big. What's your view, given what's happening globally?
In context or in backdrop of the global environment, clearly, yes, in the short term, we are likely to see some pressure. We've had a pretty strong rally over the last couple of months, and so it's quite possible that some of those gains will get shedded. But what we're really seeing is that a lot of stocks, a lot of sectors, especially in the broader market, are actually in a very strong bull market, and that's really where the opportunity is for India and investing into India. And tier 2 banks, the auto component space, the capex plays, and defense. These are some really very interesting opportunities, and I clearly believe that sectors like these are going to be in a very strong uptrend and in a very strong bull market, and which could perhaps defy global trends in terms of softness in global equity markets. So I clearly believe that India is becoming a contrarian play globally, even in context of emerging markets, and within that, some of these sectors are looking incredibly attractive.
Okay, actually, a lot of spaces have come back in a big way. Specialty chemicals was one space that was not doing well for a while. That entire lot has come back, about 15-20% gains is what we're seeing there. Consumption as well, right? Something like a Varun Beverages, Metro Brands, Radico Khaitan, all of these stocks are up and about today. Easy Trip is up almost about 2%. So, Nilesh, what are your thoughts on consumption? The whole consumption space was under a bit of pressure because of raw material pressures, but now raw material prices have also cooled off. Is this a space that you like? And if yes, what bucket are you looking at from a long-term investment standpoint?
Yeah. The general consumer space is quite likely to underperform because some of them will have challenges of both growth and margins and therefore earnings. But two pockets that we like quite a lot in the consumption space is one is essentially the alcoholic beverages space, the liquor companies. We own both Radico Khaitan and United Spirits, and both are well poised. Especially Radico Khaitan, that's currently undergoing a huge expansion plan, which is likely to play out maybe a year or two from now, and they have been making huge strides, especially in tier 2 markets, and building some really solid brands out there. So I think alcoholic beverages as a space looks very attractive. The second space which looks very attractive, which I alluded to earlier, was essentially the foods, the snacking, the biscuits and the bakery space. I think that entire space is looking very attractive. So essentially alcoholic beverages and packaged foods. These are the two sub-segments in the overall consumer space which we like quite a lot from a medium to long-term perspective.
The Nifty is in the green now, 2 points higher, so absolute turnaround from the day's low. Market breadth is comfortably 2.5:1 in favor of advances. So this is a pretty good market that we are looking at. 17,500, by the way, is where the index is at. And so many stocks are now starting to come up and perform. Reddington, for example, is up 7%. India Cements is up 3.5%. Varun Beverages we spoke about. Gland Pharma is up about 3%. There is Astral, which is up 2.5%. GE Shipping is up 3.6%. CRISIL is coming up sharply. Borosil Renewables, which saw some pressure yesterday, is up 4%. And only highlighting things with volumes, Astra Micro is up 5%. It's had a fantastic week month. So, things are looking good. Everest Industries, I think it's a roofing company, 15%, 16% on Everest Industries. So 724 on that one, on decent volumes as well. Nilesh, you mentioned defense. Which segment do you like the most? There we had the management of Mazgaon Dock with us recently. They were talking about some big numbers in terms of tenders which they're going to be applying for. There's Kochi Shipyard, but of course there is the other pack, Bharat Dynamics, BEL, etc.
Yeah, Prashant, defense essentially is one of the most compelling opportunities. Given the geopolitical environment that's really there, especially in Asia and Europe, I think in that context, indigenization clearly is a big imperative. And both the government's resolve as well as the reforms essentially are driving indigenization. And I think in that context, I clearly believe that defense as a space is already in a bull market. It's one of those few sectors where stocks essentially are making new highs. The earnings momentum is strong. Order books are essentially bulging. So overall, I believe that defense as a space will do very well. And, I'm not quite sure if stock picking is going to help too much here, because when the sector is essentially in a bull market or an uptrend, probably everything does go up. Right now, the challenge, of course, is that the private players, the valuations are a tad higher. It's the PSUs where valuations are way more attractive and have a much more stronger kind of an order book. So I probably believe that a basket of both PSU and private players in the defense space look extremely attractive, and clearly believe that that's one area where investors need to be in a slightly more aggressive manner.
All right, Nilesh, we'll leave it there today. Thanks a lot for joining us. Good talking to you as always. The market, by the way, has made a huge comeback. Will be interesting to see, though, that if there's a second dip or not, because on days like today, you can never be sure. The market was down for 2 days running, maybe had digested a lot of it, and this morning we opened right at the 20-day moving average. So maybe purely from the risk reward point of view, and sometimes these algo trades play out, that trade did play out. Now what happens at higher levels? Do we have life above 17,500? I think that's something we'll keep an eye on.
And this buy on dips, right? Something that's worked consistently through this year is perhaps working even now, despite all the volatility?
I think maybe too early to say that, Sonia, because the global environment has once again turned quite vicious. So in that sense, I think won't want to make too much of the first hour move. I think if we close here, maybe you can say that, but let's see where the closing is today.
Oh, absolutely. You need to be really nimble-footed in this market. It's very, very volatile and it's changing by the minute. But we'll keep tracking the market action for you. In the meantime, let's thank our market guest and move on and talk about the gold financing space. Lenders like Muthoot and Manappuram Finance have seen their customer base decline over the last few quarters, as the common narrative is that customers are shifting from NBFCs to banks. We spoke with Manappuram Finance yesterday. They said the demand of NBFC customers at the lower end has come down, but there has not been a shift of customers to banks, and they are seeing new customer additions playing out. Let's take that discussion forward with George Alexander Muthoot, the Managing Director at Muthoot Finance. George, thanks a lot for joining us. Your peer Manappuram Finance told us yesterday that no, they're not losing any customers to banks, and neither is anyone from the industry. Would you concur with that view? And if that's the case, then what's the reason for this fall that we're seeing in the customer base?
Thank you. Yeah, I agree that customers are not shifting from NBFCs to banks. Banks are actually getting a new set of customers. The market is widening or broadening. That is what is really happening. It's not that customers from NBFCs are shifting to banks. That said, the second point is the fall in customer base. It's not the fall in customer base has not fallen. The active customers for us would have come down a bit. That is because we had quite a lot of auctions in quarter 4 and quarter 1 of this year. That has been the reason why many of the accounts got marked away from the active accounts. That is why there is a fall in the active customer. But the customer base of the company is always about 3 to 4 times that of the existing customer base of about 52 lakhs. So we have that customer base. The customers will come back. If not today, tomorrow, next month, month after next, they will come back for loan.
I got that point. George, sorry, good morning. But the point is, you're saying that the market is expanding and banks are getting new clients. What prevents you from getting those new clients? I mean, if the market itself is expanding.
Yeah. Banks are getting a set of new customers because they are actually offering very low rates of interest to big customers. So big customers, then they offer 6%, 7%, 8%, etc. Generally, some customers definitely go there. Banks have that advantage of that very low interest rate. That is why many customers are going there. Of course, they also have the advantage of this subvention which they get for agriculture loan, which they also pass on to customers. All those put together, they are able to offer very low interest rate to customers. Many of the customers take this. Some of them take it as agricultural loans also at very low interest. So that is where they are getting their customers.
Mr. Muthoot, good morning, Prashant here. Mr. Nandakumar at Manappuram also told us that the reason is not switching to banks, existing customers switching to banks, and you're agreeing with that. But the second thing he said is the reason is general stress overall at the cottage level industries. I mean, lower segments. So demand for credit in that sense is not there because of various shocks over the last couple of years, COVID being the last one. Would you agree with that?
Yeah, I would agree that the last 1.5 years, there was stress on a lot of customers. That is why we had to do a lot of auctions in quarter 4 and quarter 1. But now I think those things are behind us. Now I see from my sense I get from my branches all over the 5,000 branches all over the place is that local demand for funding is definitely picking up. And I'm sure that this festival season will show demand more picking up. So we should see demand picking up. As he said earlier, in the last 1.5 to 2 years, there was definitely stress in the market, stress with the customers, etc., having not getting their due share of business, etc. But now I think things have changed. I see a positive outlook now.
Will you have to do more to get customers in terms of teaser rates? And I saw an advertisement at home gold loans. Get a gold loan sitting at home. I mean, so would you have to do more? I mean, in terms of,
Yeah, I agree. It's not the interest rates that a customer can come to us because we may not be able to compete with the banks on rates, but it's on the service part. So as you said, maybe giving them a best of service, bring them a 5-minute, 10-minute, 15-minute service definitely has been the forte of NBFCs and more especially for Muthoot, because we dispose a customer in 5, 10 to 15 minutes time. That's one of the strengths. Second, now, as you already said, we are also giving the option for customers to have the gold picked up from their house. So what we do is we send our own staff, our staff or our manager to the customer's place to pick up the gold, check it there and bring it here, and probably pay the money sitting there itself. We can pay the money to him. So our staff goes there, but this is only for customers who really want the scheme. But what we have seen is that 95 to 97% of the customers would prefer to come to the bank and hand over the gold to the branch itself. But then when they have, some people, for convenience sake only, they request for a home service, and we do it.
Okay. Give and take everything, even if banks are getting new customers, it just means that people are heading towards banks more than NBFCs, and perhaps that's where the trust factor lies, right? If that is the case, assuming that is the case, do you see growth slow down, especially for your own company? What kind of AUM growth would you target for the full year?
So I wouldn't agree with you that the trust of the NBFCs is lesser and the trust to banks is more. I think the trust for NBFCs like us from the customers has always been there. It's especially the smaller retail customers. Definitely the trust is there. What I said again, I repeat, is that the bigger customers, maybe the 5 lakhs, 10 lakhs, 20 lakhs and bigger loans are the ones which definitely are going to banks, because definitely for the interest differential, there is the big different interest. That is why customers are getting.
Oh,
now your second question was, in this context, what is our growth estimate, etc. I understand. So we are generally, as usual, Muthoot, myself, I am always very optimistic about gold loan business, about the loan disbursals, etc., and the strength of the gold NBFCs in gold loan. I'm very optimistic on that, and I'm sure some of these things are passing. It will pass away, and after a while, things will come back to normal. So we should, in the first quarter, we had a degrowth of about 2%. That is about 1,500 crores was degrowth, mainly because of auctions.
Got it.
Now Q2, you should see things stabilizing, and Q3 and Q4, you should see business going up. We expect about 10% growth by the end of the year.
No, got that point. But George, the issue here is that at the end of the day, these are business decisions, right? I mean, I may have a trust factor with a bank, but when I got a much better rate with the other bank for my home loan, I shifted, right? So in that sense, if there's lower interest rate available, customers will take that. So do you plan to reintroduce the teaser rate, or just to get some customers back?
No, I don't think we need to do the teaser rates, etc. I think we as an NBFC, our strength should be with the better service. See, it's not, I again repeat that no customers would have gone away from Muthoot and taken the loan from Muthoot and given to the bank. No, it is the newer set of customers who would have gone there. I wouldn't agree on to say that customers have shifted from an NBFC to bank. I wouldn't agree on that. But new customers have gone there. But definitely, please also understand, this is not a 5-year or 10-year or 25-year loan where the shifting happens.
Yeah.
This is just a 1-month, 2-month loan. There is nothing like shift. They close the loan in so quick time, and there is no entry load, exit load, etc. So it is, nobody needs to shift a loan. Nobody does that.
Banks have always, rates offered by banks would always be, earlier also would have been much lower as compared to what you would offer, right?
Yes.
So the difference is competitive intensity. More and more banks coming and offering this product now. So what's happening to competitive intensity? I mean, is it still very high?
See, it is the banks who definitely had a lot of NPA. That's my feeling. It's not the industry feeling or somebody else's feeling. My personal feeling that banks had a lot of bad loans, NPA issues, etc. But gold loan sector is one where you don't have the NPA issues, you don't have the loss, etc. So, but then of course it is operationally challenging, but still. Many banks have about 60,000, 70,000 branches all over India. Every branch does a little bit of gold loan, is a big number. So banks have given a more focus to gold loans in the last maybe 3-4 quarters. That is why they are seeing the AUM in gold loan growth. But of course, banks, I'm sure, should not be doing this retail business of gold loan. I think their focus would lie elsewhere, but it's a matter of time.
So this 10% rate that you're giving us, it's much less than what you've done in the previous years, right? You're getting a bit conservative because of the challenges?
No, it's not the challenges. It is the ground reality also is that probably didn't want to give a very high expectations and not trying to achieve that. So if things are better, we may be able to do 10, 12, etc. But I think 10 is something which is definitely
used to be 15% like clockwork, but now 10 for the next for the foreseeable future, 24, 25.
I think we have to wait and see. Probably next year, this time, probably we may have a better view of things, and probably things may look better at that time.
The share price has obviously been reacting to all of this, Mr. Muthoot. Any plans to kind of do something for shareholders?
We still own, the family owns about 73%. We have not sold any share in the last 10, 12 years. Since listing, we have not sold any shares in the market. So the share price in the market is actually of no impact to us because we don't sell, we don't purchase in the market. But of course, investors who have invested the shares probably, they are looking at having a higher share price. But what we can do from our side is to grow the company, make better profit, and the share market should turn positive after that when they see the business going. What we can do in this is run the company well, have high growth, and that is our.
Absolutely, that is your core strength, right? I mean, what the share market does with the stock is anyway beyond everyone's control. So I guess you can just control the business operations. Thanks a lot, sir, for joining us. And these are challenging times, but I'm sure companies like yours can overcome it.